VA Loan 101. These are some of the major terms we want to make sure that you understand if you're going to go utilize a VA loan. The first one is the VA mandatory funding fee. What is it? It's a charge directly from the Veterans Administration to the veteran for getting a VA loan. Here's the deal. Every lender has to charge the same VA funding fee. Now, the amount of that fee is going to adjust a little bit depending on your down payment and the number of uses you have with the VA loan, if it's your first use or if it's any use thereafter. But the deal is every lender has to apply the same funding fee that the VA mandates. Sometimes we'll get a call and they'll say, hey, this lender's telling me the VA funding fee is X, and this lender's telling me Y. Well, it shouldn't be any different if they're looking at the right spot of determining how your funding fee is going to be set by the VA. So know that it's the same no matter what lender you're with. Here's the deal. When do you pay it? You pay it at closing. And how can you pay for it? The buyer can pay for it at closing, the seller can pay for it at closing, or what we see most commonly, the funding fee can be rolled into the loan for the buyer at closing. How much is that funding fee? We talked earlier a little bit on how the service-connected disability can affect your VA loan. Right up front, if you have 10% or greater disability rating from the VA, which the VA states that roughly half of veterans could be eligible or are eligible for VA disability, then there is no funding fee. It gets waived. Big benefit if you already have VA disability or are looking to apply for VA disability. The funding fee just doesn't even matter. It's gone. But for a lot of our folks who are active duty, many of them are not going to be exempt. Then how much is the funding fee going to be? Well, if it's your first use, the funding fee is 2.15% if you're putting 0% down. If you're going to put 5% down, this is where the VA actually incentivizes you to put money down, that funding fee drops to 1.5%. Now, we know for a lot of our folks who are buying for the first time, that benefit isn't quite as big for them, and a lot of them might not have that 5% to put down. But where you really get a big bang for your buck when putting money down on a VA loan, and putting that 5% down especially, is when you go for any use after your first. The VA calls this subsequent use. So if you're going to use your VA loan for a second, third, fourth, fifth time, that VA funding fee jumps up to 3.3% if you're putting no money down. But the moment you put 5% down, it pulls right back to 1.5%. That's a huge savings. So we like to tell folks, hey, put 5% down and you save almost 2% off that funding fee. That's nearly a 40% return on your money. It's one time, sure, but you also get to keep it essentially because now it's equity in the home. But big return if you can get that 5% down, especially on any use after your first time with the VA loan. Keep that nugget in mind. Now, certificate eligibility is the next major item to understand. This is the document that says you are eligible or not eligible for the VA loan, and us as a lender gives us an idea if you're exempt from that funding fee or not exempt. There's also be the information on if you have other outstanding VA loans, so we can make some calculations. The key here is that we want to pull this early. So you want it looked at during the pre-approval or the pre-qualification stage of your mortgage application. Why is that important? I used to be a real estate agent, selling 60 to 80 homes a year, primarily to active duty military. Here's the deal. When we work with a lender that doesn't understand the nuances of working with a VA loan, that certificate eligibility sometimes wouldn't get pulled or looked at until we're under contract. Now, all of a sudden, you run the risk of where if it's viewed and there's an issue, that would blow up a deal or delay a deal because there's nuances of VA loans you just got to understand. The COE, certificate of eligibility, is a big one of those. So just remember in your mind that it's checked at the beginning. That way, if there's any issues with it, you can get them corrected before you close on your loan. And the other item is you want to make sure that you're not charged on it because it should be pulled for free. If you're working with someone who works a lot of VA, they should be able to pull that directly from the VA. Now next, looking at property types with the VA loan. So there's two major things that we got to look at for property. That's one that you're living in and not living in. So we have eligible and not eligible homes. Think of it this way. If you plan on living in it, the VA will most likely guarantee it for the loan. So those major property types are single family homes, good. Most condos will be good. Townhomes, good. Multi-unit properties, that's duplex to a quad, 2, 3, or 4 unit. Those can be good. We're going to say investment properties don't work here in a minute, but if you buy a duplex and you rent out one half and live in the other, that can work. And in fact, we can sometimes take that income from the side you're renting out and apply it to your loan qualifications. Big benefit. Mobile manufactured homes. Some folks are telling us that, hey, we can't get it. VA says no. That's actually a lender-dependent deal. You can do a manufactured home if you'd like in a mobile home. The key is you got to own the land underneath. Then also new construction. That's something you want to pay attention to. We can do new construction with VA loans. That's if you're buying a new build from a builder and they're completing it and you're taking the financing over, Or if you found a plot of land, you have a builder, and you do what's called a one-time VA close, you can do that as well. Property types that don't work: commercial property, raw land, undeveloped land, and then investment homes. Homes you purchase as an investment property from the beginning don't work with the VA loan. You gotta live in it as your primary residence.